Okay, guys, so let's start now. Okay, today I want to discuss about how to draw reversal levels or reversal area for trade entries. Reversal area or reversal levels for trade entries. What I mean by reversal area or reversal level is that anytime you took a trade, you should always target all the reversal area for your trade entries. You should target the reversal area for your trade entries, because when you always took a trade at a reversal area, you always have a good winning ratio. If you took a trade at nowhere, like any random level, you might end up losing the trade. Okay, so I'm going to show you now. I'm not going to waste our time, but I just want to show you how to draw the reversal area. How to draw reversal area, what you need to observe when you are drawing reversal area. When you are drawing reversal area, there are so many things that usually there are so many um, price level you should consider, and the behavior of the market. There are so many things you should consider and the behavior of the market. For instance, if the market is reversing multiple times on this level, you should consider the way the market reverse. Are you going to, because if the market is reversing from this level, the price might still come back and come to this level and still reverse. You should always find the reason why the market always will reverse like this. Because even though you extend the level, if you extend the level to the right side, if you extend the level to the right side and the market break the level, that level now become a resistance, a support. So the market will easily reverse from that same level. But you might be wondering that why this happen. Why is it that this candle break and the market still reverse? So there are so many things that you need to confirm, that you need to observe when trading reversal level. And most of the time, when you are trading reversal level, market usually form continuation trend. For instance, if the market reversed from this level and buyers entered here, next candle will also be a green candle. Next candle will also be a green candle. Next candle will also be a green candle. Only the buyer said, let's not stop here. So they will give time for the sellers to enter. Most of the time, market might visit the level like 10 times. Okay. Most of the time, the market might still come back to the level and not respect the level. So there are, so when you are talking about binary option, many people develop strategy. Many people develop how to identify the price action, the price action strategy. A lot of people develop how to find a good setup when they are trading binary option. But let me tell you, there's nothing like holy grail strategy. Like for instance, this is what I mean, that if you draw a reversal level, something like this, and market reach the level, the market might not reverse immediately. It might be after the breakout before market reverse, or it might be exactly inside the zone before market, or market might still form like two more candles before it finally reverse. So when you are trading, you should have that in mind, that your strategy is not to give you 100% winning ratio. Okay, so I'm going to upload the chart now, and I'm going to draw the reversal level. Now I'm using 1 minute. Okay, because 5 minutes we waste our time. So I'm not taking much of our time, because after this class I'm still having forex class. So this is 9 tab. So I've opened 9 tab. Okay, now let me first draw the level here. You know, when the market is approaching the resistance or the market is going down, okay, that means you have to look on the left side, what has happened on the left side and how the market reacts when the price reach the level. Okay, this is what I mean. When the market, okay, let me use the current price movement so that we understand. This is where the market is, the current price is now, right now. So what I'm going to do is I'm going to check on the left side. Now there are different market conditions and different type of market that you should trade on. For instance, if you want to draw the level here, I would say it is not that easy to draw the level here. It's not that easy because the way the market is right now doesn't give enough information to draw your reversal level, because at this area the market is still consolidating, so you can't draw enough reversal level. For instance, let me try to draw a level here. If I should draw a reversal level here, this is how I'm going to do it. I'll look on the left side. I will see the way the market reacts, that when the sellers are, come on. So I will look the way the market react, that when the sellers are entering the market, they finally reverse from this level. This is where we start seeing some bias candles, right? That is the area that we start seeing some bias candle. So what I'm going to do is I'm going to draw a level here that shows that anytime the price, because this is the last candle before, this is the last candle before bias enter, which means there's a level on the left side that make this red candle to form, that make this bias to enter after this red candle. So many times the price reached the same level and the bias entered. Here also we got a rejection. So in that case, what I'm going to do on the left side, I'm going to confirm my that single line I drawn, so that, okay, it seems that there's nothing on the left side. So now the second line which I will draw is going to be at the lowest point. It might be at the lowest point or at the lowest body of the reversal level where the market reverse. This is the lowest body. Okay, this is the lowest body. So I think here, okay, so this is the lowest body. This is the last red candle before bias entered, and this is another candle, red candle, when bias entered again. So now I've drawn a zone, which means I'll be expecting the price to come to the zone and a rejection inside the zone before I entered a buy, a call option. You see that first time after this green candle formed, bias entered again. Now the market makes a retracement, a correction, and close exactly at the zone with a rejection. You see that bias entered again. Then if you look forward and if you look on the right side, you see that sellers again entered. But instead of buyers entering the market, there's no sign of buyers. Instead of buyers entering the market, there's no sign of buyers. So in that case, as there's no sign of buyers, which means the sellers are very strong at the moment, then what you're going to do in this case is you have to create alert on this level. Create alert on this level. This alert will notify you when the price retrace back to that same level. This is where buyers are supposed to enter, but no sign of buyers. So sellers have already dominated the zone. This is where buyers entered. Okay, buyers enter from this level. So buyers have already dominated the zone. So anytime sellers come to the zone, buyers enter. But this time, sellers come to the zone, close inside the zone, but there's a new low, so no sign of buyers. So which means sellers now have now dominated the zone. So you have to wait when the price will come back to the zone, then you place your trade. Now, one thing you should know that most of the time when the market touch the zone, you will see a rejection, that the candle will close below the zone. I will only recommend you that you should only trade when the price reach inside or close inside the zone. Do not trade if the price got rejection from the zone and they make a small pullback. Okay, this is what I mean. When a strong green candle form, got rejection from the zone, and make a small pullback and close below the zone, do not trade, because most of the time the buyers will enter and most of the time sellers will enter. So you don't know where the market is heading to at that moment. So in that case, give way for the price. Only trade when the price come back to the zone and close inside the zone. Then you enter the sell trade, and you might enter like two candles, a sell trade, put option, at least two candle. Sellers might enter continuously, but if you want to be on the safe side, you might enter like two candles. Let me check the second one. Let me check. Okay, now you see that this is seller's entry, and this is the last red candle before buyer entered. This is the last red candle before buyer entered. That means there's something around this level here. There's something around this level, and if I check on the left side, let me confirm on the left side. Okay, so here we have some resistance also. We have some resistance. Okay, let me draw the second line. And okay, so let me do it this way, because this is the last red candle and the buyers entered. So immediately buyers entered, sellers still entered. So this is a zone, a reversal zone. So now let's check on the right side. Let's see what happened to the price. So first time when the price reached the level, this is the candle we see, a Marubozu candle, close at the level. So buyers entered. But this buyers that entered is very strong. You know, when I say that if you want to go with buyers like twice, you should only enter the trade. If you want to go with buyers like twice, you should only enter the trade if you see small green candle. That means it is enough to trade two candles. Okay, like if buyers entered and closed here, you can still go with buyers again until finally buyers reach the next high. So if buyers reach the next high, the market might decide to reverse or might decide to continue. So maximum two bullish candle. Again, when the price reach the level, you see that buyers still entered. Again, you see again some buyers entry. This candle, this red candle only got rejection from the level, but it didn't close inside the zone. But when this sellers entered, it closed exactly at the zone with a rejection from both upper and lower. So you might decide, okay, let us go with buyers. But remember, when the market is approaching the level and there's no sign of buyers again, this is the last candle that formed. That doesn't show a good sign the buyers will enter continuously. So wait again when the price reach the zone, enter the put option, because the last candle that formed cannot withstand this bullish bearish momentum. So in that case, sellers might decide not to respect the level again. So in that case, wait for the price to reach the zone and place put option. Let me create alerts so that we'll be notified when the price reach the level. Now this is another pattern here. This is another price movement. Okay, let me go to the left side. It seems that the left side, the market is not giving too much opportunity to draw levels on the left side. So let me draw resistance as reversal area. So what I'm going to look for is I'm going to look for uh, a support that is not respected. Like this is a support that is not respected. So I think okay, Euro GBP. You see that buyers have already entered the market. I think sellers will enter the gain on the next candle. So this is a support, and that support is not respected again. So I'm going to draw a level. Let me make it here. Let me put the line, the first line here, and second line should be around this. Okay, let me try to confirm if I draw it correctly. There's no enough price action on the left side to give us confirmation. Okay, that was a late entry. Okay, so here, this is a support level where buyers entered, but this time no sign of buyers. So I draw the first line a little bit high, that when the sellers entered, buyers entered here also. So I think that is good enough for this line. Okay, then second line, let me adjust it a little bit. I think this. Okay, so which means anytime anytime the this is seller's entry, anytime the buyers reverse and touch this zone, there's always a rejection. So you can just trade place put option immediately price touch the zone. Or if you want to trade safely, always wait for the candle to close inside the zone, then you place your trade. You see that first time the market got rejection, and this time you see that rejection. So many traders will place put option because where the market got rejection, sellers enter here, rejection, sellers enter here. But this time rejection, buyers still entered, and the candle also got rejection inside the zone. So sellers finally enter the market. Now, let me tell you the reason why this has a rejection, sellers enter, the rejection, sellers enter. Because when you are trading, you know, most of you are familiar with a candlestick pattern, right? Where we have a shooting star, hammer, inverted hammer. How do you trade candlestick pattern? When you are trading candlestick pattern, you should not just trade if there's a seller's momentum and you only just see a bullish candle like this. Then you, okay, this is a inverted hammer. Let me go with sellers. Fine, you can go with sellers might enter. But most of the time, when it's this single candlestick pattern form, it's a sign of continuation. It's a sign of continuation to the downside. So in that case, if you are trading this kind of pattern, if you are trading candlestick pattern, make sure that there's a trend. So at the end of the trend, if this is a resistance, and at the end of the trend, if any candlestick pattern form here, you can place your trade. But if there's no trend and this is a resistance, you only see candlestick pattern that form around this level, it might not work. It might reverse and might not reverse. So if you want to be on the safe side, always trade a candlestick pattern if there's a trend like this. This is a bullish engulfing. Sorry, this is a like something like let me say inverted hammer. Is a sign of continuation for the price to reach this level before sellers enter. But because there's no bullish trend, this time there's no bullish trend also, but this is also a strong candle with a small rejection. Sellers entered. But here we have a bullish trend. So we have a bullish trend. This is some buyer's trend. And this type of candle now form at this resistance reversal area. So we expect sellers entry on the next candle. We are not expecting continuous sellers entry. We are expecting at least one or two sellers candle. Like if the sellers enter here and are very weak, you can go with sellers again. You can go with sellers again until the finally sellers reach the next um, remember the trade that we took yesterday on GBP USD? Those of you in the Signal group, we took some buyers bullish trade. So that trade was when the price touched the level. So I was looking on the left side. Immediately the price touched the next high. Then I decided to stop and took another trade. Okay, because when the price reached the level, we placed continuous bullish candles, continuous buy call option until the price reached the next recent resistance. So I decided to stop the trade. So here, if sellers entered and sellers stop here, you can place put option again. You can place put option again until they finally reach the next low. Then you can decide to stop. So it might be two, one, or more than that. So here, this is another level where we can be expecting our market to reverse. Okay, this is a fake out. because when you see that markets break the level and you're expecting buyers to enter here if the sellers reach the level and market did not reverse, we call it a fake out. So that is a fake out. So that means if you are a forex trader, which means this is another resistance area here. So if you want to trade a reversal, a single candle reversal, wait for the price to reach this level, then you place your trade. Let me see Euro GBP. Okay, so no sign of sellers again. But here we're going to take another trade once the price reach the zone here. Now this is the current price movement, and this is a resistance. Okay, so let me draw another level here. Okay, let me do this way. So this is another reversal level. I'll be expecting price to reverse, which means the buyers reverse and touch this level. And I'll close inside the zone. I'll place my trade. So you see that one of the mistakes that we usually made, that when we trade a reversal, we see the market touch the zone and we place our trade without the candle. See what happened here. When the price, let's say for instance, this is the level that we have drawn. So we are expecting the price to reverse inside the zone. Immediately the price touch the zone, we place call. But you see what happened? The candle finally closed below the zone. So that gives us a false signal. So here we only want this price to close inside the zone, not outside. So what are we waiting for here? Wait for the price to see that only got rejection. We are not trading in this kind of situation. I'm still going to wait. So here the price is still coming back. Here this is another resistance level. Okay, we want the price to close inside the zone, and let's see if the buyers will enter the market. You see there's some rejections. Only wait once the candle close inside the zone, then you can place your trade. Don't trade if the candle is above the zone or below the zone. Only trade inside the zone. So wait patiently, and also try to observe the gap, because market might decide to gap, and once price gap it might change the direction you are expecting. So yeah, I'm expecting a, oh shit. I don't think the market is going to reverse here. See, I don't think the market is going to reverse. Then if you want to be lucky, you can place a continuation. Okay, buyers have already reached the zone. So let's see what's going to happen here, and let's wait for the candle to close. See, the market is flipping over the zone, crossing the zone. We can still take this trade once the price return back to the zone. Oh shit, strong bullish candle, no sign of. Okay, okay, so let's wait for the candle to close. Come on. Shit. So this is one of the reasons why I don't like trading OTC markets. But I like trading OTC market most of the time because it's respect zone more than remarket. What I mean is that this OTC market, you see that we have some base currency and we have some uh, code currency. Like for example, this is Euro USD. If you look at USD CHF, USD CHF, USD here is the base currency. USD is the base currency. USD on euro is the counter currency. But in real market, most of the time, if you place put on euro USD, USD here also will be call. If you place put on euro USD, USD CHF will be call. So most of them, most of these candles, sorry, um, what did I call it? Currency correlation, they move differently in real market, but in OTC market, there's nothing like that. There's nothing like that on OTC markets. So even though this is put option, Euro USD must also be a put option. Okay, there's nothing here. So okay, but I think you should wait once the price close inside the zone. You see that only got rejection and is reversing, which means the zone is correct. The zone that we draw is correct. But we only have, if you want to be trade, if you want to be safe, you have to take trade once the price close inside the zone. Don't take trade outside or below. So, and the candlestick pattern that form is a hanging man. This one also is giving a sign of reversal. So let's see. You know, if with confidence, once you place trade with confidence, you are trading that okay, this market will reverse. But if eventually the market did not reverse, for instance, the price closed inside the zone and the market did not reverse, do not blame yourself. Do not blame your strategy. Continue trading because not all the time the market will reach the zone and reverse. Market might decide to violate the zone. Shit. Market might decide to violate the zone and not respect the zone. So in that case, do not think that your strategy is not working. Okay, you see that sellers did not enter. See that sellers did not enter here. So do not think that the strategy is not working. It's just that the market doesn't want to reverse. So what they have to do is place trade if the price cross the level and then come back to the zone. Here I think the market is going to reverse. Okay, but this it did not reverse. So it's a sign the price is making a continuous movement to the upside. That is why when we took a trade, most of you who are familiar with forex, when we took a trade at a resistance level, instead of market to reverse immediately, what the market always do is market will consolidate inside the zone before it finally find its way to the downside. Most of the time market will reach the zone and reverse. So it depends on the number of traders who took the trade at that moment. That means at that resistance zone, some buyers are still trying to buy, while some sellers are still trying to sell. That is why the market will consolidate. That is why we have some consolidation inside the zone. Then, if anyone won the battle, maybe sellers won the battle, the market might decide to drop. If the buyers won the battle, the market might decide to continue. Okay, I think I made a mistake here. This candle did not close inside the zone. Did not close inside the zone. So it is at the edge of the zone. Maybe that was the mistake I made. But this candle closed inside the zone. So I think sellers entered. So what are we doing here? We are waiting for the price to maybe make some correction back to this zone and we go with buyers. And here, okay, we see a bullish candle that touched the zone, that came back to the zone. After sellers entered, we see another bullish candle and they close inside the zone. I think maybe sellers will enter again. Let's see. This is the next high, the next support level. So that is why we have a strong red candle that closed exactly at the next support level, buyer center. But if you close here, you can go with sellers like, let's say, maybe twice or three times. So it depends on the candles stick shape that form. here you should not think of going with sellers again, because the price is still at the level, still at the zone. Buyers might decide to enter again, or sellers might decide. So do not take trade if the market is still at the zone. So only trade if the market is below. Then you look on the next low, the next support level. Then you can decide to place put option. But if this level is acting as a strong level for the sellers, then you can decide to go with sellers if the sellers is inside the zone. But I'm not sure. Many multiple times there's rejections from this zone. So I'm not sure if the zone is still strong enough. So if I'm the one, I'm not taking any trade again. I'll only wait the price is below, then I'll decide to go with sellers. So you see that this is the next low, and we say rejection. The candle got rejection, and we see some buyers trying to enter the market. Let's say it's going to win a battle. Maybe sellers will close with a rejection, or sellers. Okay, I might decide to go with sellers again, because this is where the buyers got rejection, and this is where we see some buyers entries, and the candle close here. So I might decide to go with sellers for sellers to fill the gap. Okay, if you want to trade like this, you should only trade with some margin of safety. I think my entry here is not safe. Okay, so like you see that twice I took the trade. Like for instance, I took trade twice. Okay, this is just one candle that reached the next support level. This is just two candles that reach the next, even break the next support level. So what are you going to do in this kind of situation is you have to wait again the price to reach this zone and come back to the zone. I think I was drawing a resistance level here. Oh shit. You see this level? You see this trade? Where? Okay, so this is a resistance. There's a way I want to do it. Okay, let me do it this way. Okay, so I think this is another level here. So maybe I'll go with sellers on the next candle. Come on, don't cross it. Shit, the candle have already crossed it. Uh, Candle have already crossed it. This is another level here. Okay, I think the candle is reversing. So the price still come back to this level, and we see some rejection. Do not trade if the market is getting rejection, but only trade if the price close inside the zone. That will give you a good, perfect trade. Yet see the candle cross the level, and we see some rejections. I was thinking, let me draw another level here. Okay, where this candle got rejection is a resistance level. I think this. Okay, let me do it this way. And next candle, next line, somewhere here. So this is another resistance level. This is another resistance level. This is another support level. Okay, look at what I'm doing here. I'm trying to check flip zone, flip resistance and support, like change of polarity. That if we have resistance here, if you have a level here, when market reverse here, once the price cross it, it also reverse. So that is what I'm checking. That is what I'm looking for. So the reason why I place this line here is that I want to make sure that the line is not at the edge of the candle, but at the body of the candle. That gives me that okay, the price closed below the body of the candle while we draw the second line here. So it closed at the zone, and we are seeing some buyers entry, but this time no sign of buyers. So which means the price come to the level we are going with sellers. The rejection. Look at what we got here. Sign that market is going to reverse at any moment. So maybe we are going to take this level as the reversal level. So let's wait and for the candle to close shits. Let's wait for the candle to close inside the zone before we go with sellers. Come on. No. You see that there's a gap. You might decide, okay, let's go with sellers, but there's a gap down. Market might still form a green candle. But we are still expecting reversal. Come on. You know what? I'm going to still go with sellers, even though the candle crossed the level. Okay, I think it's rejecting. There's no gap. I think a very small gap. Okay. The reason why I say if the candle close above this zone, I'm going to go with sellers was because this is a sign the market is going to reverse. Once I spot this candlestick near a resistance, it gave me assurance that okay, at any moment now, market is going to reach a resistance level before it reverse. I think this is the next low or this is the next reversal level. So maybe the market is going to continue. That is why I said even though I see a strong green candle that close above the zone, something like this, I will still go with sellers because of this sign, this candlestick. This candlestick is telling me that okay, pay attention, traders, pay attention to what they are doing. This market is going to reverse at any nearest resistance zone. So what you have to do is wait for the price to give you a confirmation before you trade. So that's why I said okay, if the candle close below or above this zone, I'm still going to trade put option. So the candle have never reached this level. The candle has never reached this level. This is if you go to 30-second chart, this is another support level. So this candle has break the support level. This is what I mean. So that gives me a sign that market is going to reverse at any nearest resistance level. So this is what I mean. This is a support level, and the sellers have already crossed the level. So which means the buyers will continue again for 1 minute or for 30 seconds, and they will continue to this next level. So this time the sellers will enter and at least continue to this level. I think that was a rejection. That was a rejection. Come on, what are you doing here? Ah, what's going on here? Okay, late entry. I don't think the buyers, I don't think sellers will continue again because of this candle that form. Here, these are some strong bearish candle. Then if you look at the pattern, you see that this is a continuation pattern. Okay, the chart pattern, continuation pattern. So you see a strong bearish candle. Okay, this is where the current price is now. So I'm going to draw a zone on the left side to capture one single reversal. Okay, so here and here. Okay, so this way. Okay, once the price closes inside the zone, we can go with buyers for 1 minute. Also, we see a retracement, one single reversal, 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 reversal. This is what I'm looking for. This is what I saw. Reverse, reverse. So I place the line here. Here also reverse. So I place the line here. If you look again, cross, price reach the zone, one single retracement, cross, price reach the zone, buyers enter. But this time, no sign of buyers, no sign of sellers. Sorry, no sign of sellers, no sign of buyers. So the buyers again cross the level, which means on the left side, if the price reach the level, there must be some buyers entry. That is what I'm waiting for. So let's check and see. Actually, the market reverse without closing inside the zone. But we are still expecting some buyer's entry. So let's see. Hmm. Bullish momentum. I don't think market is going to reverse. Let's see. Let's try our luck. Shit. Candle did not respect the zone. It crossed the zone. So here you see that market is not trying to respect the level because of the bullish momentum. But most of the time it do respect levels like this, even though there's a bullish momentum. Most of the time it doesn't respect. So we want to be on the safe side. Do not trade when you see a strong momentum. When you see a strong candles approaching the level, it might not respect. Come on. The network is giving me problem these days. Very small green candle, no sign of sellers. Okay, I think one last, let me check one more example, then we call it a day. I hope you guys we understand the setup. So I'm trying to draw the zone so that once the price reaches the zone, then we can be notified. Let's pay attention to this. Oh, strong candle. Okay, rejections. Let's see what we got here. Come on. Ah, strong with the market. We can still go with buyers because it's still a reversal zone. Still a reversal zone. I think it's still a reversal zone. Maybe the candle touched the zone. So I think one small green candle. Though I didn't see any candle here to okay. I think this is a wrong trade. Euro USD. The candle crossed the zone. Maybe the price is approaching the next reversal zone. Okay, if I should draw next reversal zone, it's going to be it's going to be somewhere here. Very strong momentum. I don't think market is reversing. Strong bullish momentum. But let's see how this candle will close at the zone because we see some strong candles, but this last candle, maybe a small green candle, can go with sellers. I think we can go with sellers here. So I think that will be the last. That will be the last. Now, remember when I said if you see a level, you place put continuously on to the next level. You know, this is the next support level. And this type of support level, this is not what I mean. Do not take trade continuously. We already see a bullish momentum. Market might just only make a single retracement, a single reversal, and buyers still continue. So in that case, when you see a momentum like this, do not think of placing put option continuously. Okay. So if there's no momentum, you you can decide to go with sellers on to the next support level. But this kind of momentum, I don't think is going to allow sellers to enter the market. Okay, so that is very simple way of trading reversal, drawing reversal zone. So I think we should call it a day. So next week we're going to talk. We're going to discuss about when you enter the trade. Once the price touch the zone, you should know when to place put option, or when the price touch the zone, you should know when to place call option to continue. This is what I mean. This is a zone. Let's say this is a reversal zone. Uh, a bullish candle touch the zone and reject, something like this. Bullish candle touch the zone and rejects. Most of the time, market might reverse. Or a bullish candle touch the zone and rejects, something like this. Most of the time, market might still continue. So I'm going to show you the different instances, what you need to observe in this kind of situation. So you should know when the market will reverse and when the market will continue. So that will be our next class, next Sunday class, next week Sunday. So we're going to discuss that next week Sunday. Okay, guys. So this is all I have for us today. If you have any question, do it now because right now I'm having a forest class.
Hello, sir.
Yes. Hello. Hello.
Yeah,
Hello.
I have a place here, and you don't. I said the way you place the line. For example, now you have removed the chart. I will have shown the last one. Now you just looked at it. You went to the left,
Yes.
and then you placed two quick lines. I
Yes.
would have loved if you have used marker to show us that this is the one I'm trying to. This is where I'm taking it. And this is the body weak and is a little bit faster. That's what I can just say for now. If you
Okay.
can just show us one more way, the way you do it to
Okay.
identify, because there are so many levels. How do you recognize? How do you confirm that this is the actual level that is working? That is
Okay.
the reversal zone.
So I
Thank you, sir.
some minute ago I was talking about um the way the market is going to do the way the market reverse. That if I want to draw a reversal zone, I will always look for change of polarity, whereby resistance here become a support. Then if the resistance here become a support, I will always know most of the time you will see. Let me show you one example now. Look at here. Look at this. This is a support, right? And this is a resistance. Now, do you want to tell me that if you want to draw a reversal level, you should draw the first line here, second line here? This is wrong. You can't draw it this way. You can't draw first line here, you can't draw second line here. Reason why is because if you look at this line, if you draw a resistance here, it doesn't touch this any, there's no lower wick here. So it doesn't touch lower wick or doesn't touch the body of the candle. So you can't draw resistance like this. Okay? Even though you put this line here, you can't draw resistance like this. Draw the second line here because it doesn't touch the lower wick, it doesn't touch the lower wick, the upper wick of this candle, and it doesn't touch any the body of this candle. So in that case, I'm not drawing resistance here, or I'm not drawing reversal zone. So what I'm going to do is check on the left side. So what I'm going to do is check on the left side, look for two reversal points as change of polarity. What I mean by change of polarity, resistance becomes support or support become resistance. And when you draw one line at the resistance, it might make sure that it touch the second support, second reversal. Like here, look at this. Sellers entered and immediately buyers entered. Immediately buyers enter, we see seller's entry. Again, we see seller's entry. So what I'm going to do is draw the line, the first line at the body. Let's say 50% of the body, or let me say 20%. Most of the time, use 20% because you might see a strong candle and you place the line, the market might not reach the level before it finally reverse. So always draw 20%. Like if this is a candle, strong candle, you can just place the line somewhere here. Always use 20% body of the candle. Oh shit. Okay, that's a winning trade. So always use 10% body of the candle. Or if this is a small candle, like for example, this is a small candle, I use 50% of the candle because the half of this candle is 50, the second half is 50. So I use 50%. So I draw the first line here. Because if I draw the first line here, if I look on the left, it's touching support like this. You see, it's touching support. It's touching support. So in that case, the line I draw here, the reversal I choose here is good. So I draw it somewhere here. Okay. Then I look again on the right side, or I might decide to go on the left side, but I check on the right side. Then I draw another line here. I saw the market also reverse to the upside. So I might decide to place the line. Okay, let me place the line somewhere here. That's this is I might decide to use the whole body of the candle. I might just decided to use 20% or 50% or 80% because this is the last red candle that formed before buyer center. We see seller center. I didn't place the line here. I didn't place the line here, but this is the last red candle before buyer center. I want to make sure that I'm using the two line as a zone. Then if you look on the left side again, you will see that immediately sellers touch the zone, there's a strong rejection, which tells us that okay, fine, my zone is correct. So we go further, we see a rejection, then the price cross the zone, then we see candle reverse, buyers again entered, and we see a small red sellers candle, which tells us that the zone is still working. Again, we see the candle close below the line, so we see some buyers entry, tells us that the zone is still working. But this time buyers got rejection, but candle close, no sign of sellers, no sign of sellers, no sign of sellers. As there's no sign of sellers, this is the time the market is violating the zone because of weak buyers entry here. So in that case, the buyers own this zone. Let's see that if the sellers come to this zone, maybe we go with sellers. Most of the time, sellers might not enter. Most of the time, sellers might enter. But let's see. Okay, here we got the rejection, and this candle close inside the zone, no sign of buyers. So as there's no sign of buyers, let's still take this zone as a resistance, which means once the price come back to the zone, we go with sellers. See the market play around for some time and finally find its way. We see a strong bullish candle cross the zone. I can decide to go with buyers because the buyers have already crossed the zone. Now again,
Sorry, sir, your shirt is hanging.
maybe the network. So the candle crossed the zone, buyers still entered. Okay, which means we're expecting sellers to come back to the zone. Then we go with buyers again. So let's see. Let's watch. Okay, so here we are. This is the zone, right? We have multiple rejection from this zone and a bullish candle, but again, there's a crossover. Immediately sellers cross this level, we are expecting the price to reach the zone and market reverse. So finally, this is where we do the trade. So buyers reach the zone, though we see some momentum, but the last candle that formed here is very weak. So we go with sellers. If I see a strong candle here, I might not decide to place any trade here. because I might be confused. Maybe sellers will enter or buyers. So in that case, we skip the trade. But the last candle that closed there is a weak candle. So it goes. Now remember what I said. Do not think of next support level is here and you go with sellers continuously. Reason why? Because this is a momentum. A momentum here and a zone here where the market will retrace. So it's going to be a sign the price is going to continue. So this candle now is a sign of continuation. If there's no momentum here, you can decide to go with sellers until the buyers until the price reach the next support level. So again, you see that immediately buyers cross the zone, as there's no sign of sellers here, immediately buyers cross the zone, wait for the price again to come back to the zone and go with buyers again. That is why I decided to place call option. But you see the very weak bullish candle. Now the sellers entered because of weak bullish candle. So which means you can still be using the zone for 100 times.
Sorry, sir. Can you please reshare your chart? It's
My
not moving.
charts,
Yes.
maybe
Yes, it's that.
it's not moving.
Yes,
Yes.
it's
I,
that.
th- I think you should stop share screen and do it again.
So this is where I observe and I draw the zone. If you check on the left side, you see that market reverse on this zone. Okay, see, I saw the market reverse, market reverse, market reverse. Yet the market did not reverse, crossover, cross below. Okay, let me choose one chart and let me draw a simple zone here. Okay, now look at these two reversal zone. Okay, shit, shit. This is not what I'm expecting. Okay, look at this reversal zone. Look at this. Buyer centered, seller centered. If I should draw a level here, one single line here, you see that it's touching this resistance. If I should draw one single line here, it's touching the supports. So I have finally find a good reversal zone. So what I'm going to do, I'll place the first line at the, let's say, 20% of this candle before buyer center. Here the market did not respect the level. Then I can decide, okay, let me place the second line here. So which means anytime the price reach the zone, we replace our trade reversal here and here. This is the reason why I go with seller, was because this is the zone. Ah, okay, I think let me make it a little more higher. So I think sellers a buyer should enter at this level. Now look at this. This is the zone, the two lines. This is the zone. First time market did not reverse. Okay, let me start from here. This is the two reversal points that I choose to draw the zone. This and this. Okay. And here, this is the first time the market reached the zone. No sign of sellers. Buyers entered. Second time the price reached the zone. No sign, no rejection. No sign of buyers. Sellers entered. Now, again, price still reach the zone. See that instead of sellers here, no sign of sellers, buyers entered. Now inside the zone we see sellers entry, multiple sellers entry. The market did not close below the zone. We see a bullish candle that formed the zone. So which means as the price is now above the zone, wait for the price to come to the zone and you place put option. First time I observed that this candle is somewhere here. I wanted to go with buyers. Those of you, if you observe, I have already placed my cursor at higher option to go with buyers. But immediately at the last second, we see a rejection. That rejection tells me that seller will still enter again because this candle is not already. No, I have not drawn the line. I have not drawn the zone, but the way I saw the zone, I know the market is not at the zone yet. So that's why I decided to go with sellers. And immediately sellers entered. Look at the candle that formed. You should know that candlestick pattern is very more important when you are trading reversal zone. Okay, look at this candlestick pattern that formed. What does it look like? It looks like inverted hammer. So in that case, it's inside the zone. I'm expecting a buyer's entry. That's why I decided to go with buyers with confidence. This is not my live account, so this is a tournament. I don't want to use my live account. And again, immediately buyers entered, we see again sellers entered. This is the reason why I said always trade call option twice or thrice before market reverse. But this time, it seems that the market doesn't want to continue. Maybe here, maybe buyers will continue. Maybe buyers will continue to the next level here. Let's see. Already we have a new high here. Because this is a pin bar. This is a pin bar and it's inside the zone. So we see buyers entered. Okay. The reason why I go with buyers because this time, the first time buyers fail to continue to this next resistance level. But this time the buyers entered strongly with new high. I think they should continue. That's why I decided to go with buyers. But if there's no sign of buyers, meaning the market is still in the consolidation mode. Market will consolidate for a while before it finally move up or move down. So maybe the price is still consolidating. I don't know. Okay, maybe that is a doji candlestick. Marubozu below the zone, I think is going to be a sign of reversal. I know we have already drawn the zone on the left side before. I think it's going to be a sign of reversal. Marubozu below the zone. So let's wait and see. But
One more question, sir.
yes,
Yeah, at the beginning of the class, you said something that
okay,
when you are trying to locate a reversal zone, you also make use of the last. Let's say, for example, is a bearish trend, and then you are looking for the last red candle before the buyers
yes.
enter the candle. What's the significance of that is, and then how do you use that? How do you? I'm trying to figure out that thing. You always look at the last red candle before a buyer enters. You use it to determine your zone somehow. Thank you.
Okay,
That's the question.
like this is a reversal zone. This is a reversal zone. So this is the last reversal before buyers enter. So what I'm going to do is place my line 20% here and here. So I'm using this zone as a reversal level. First time the price touched the zone, we say rejection, but we need the candle to close inside the zone. Okay, so I'm using the last reversal to trade because this is the last reversal before this bullish moment, which tell us that this is resistance. It's just like bullish engulfing. Market reverse. So, and market cross the level. In that case, we are expecting the price to reach the zone before we go with buyers. It's just like bullish engulfing. Like all this movement here, they are sellers candle. All this movement, they are sellers candle. Why all this movement are buyers candle? It's just like bullish engulfing. So wait for the price to come to where sellers entered, where sellers entered here, and where sellers close. You might decide to draw a line where sellers enter, where sellers close. Wait for the candle to close inside the zone, then go with buyers. So that is why I'm using just like this. This is a bearish engulfing pattern. Wait for the price to reach the zone or come back, then you can decide to go with sellers. Okay, maybe I'm going to go with buyers here because if I should extend here, maybe it's okay. So, like this bullish momentum is one single. Let's just take it as one single bullish candle, and this small retracement is one bearish candle. So what you are doing now is wait for the price to come back to this level, and maybe you draw a zone from the week high to the week low. So wait for the price to come back to the zone and place your trade. It's just like supply and demand. Just like supply and demand. Okay. Maybe buyers we entered. So it's just like supply and demand. That's why I'm using this. If you look on higher time frame, all this bullish candle is one single candle. Why all this small retracement is one bearish candle? Maybe it's bullish engulfing. That is why the market is going to reverse once the price comes to the zone. So let's see what we got here. Very small. Okay, I think we should stop here. So you see that no sign of bias. Market is still going down. So in that case, momentum has started. So wait for the price again to come back to the zone, then you place your trade. So I think there's no other question because I'm already late.
Hello, sir. Please, hello,
Yes,
sir.
yes, do quick.
I really want to know the reversal zone. Is it really more effective when it's to be traded as a replacement, or when once we see a weak candle at the zone?
It depends on the market's behavior. Like
Okay.
this trade, I think GBP USD immediately. I think USD CHF. Like this is the weak candle that formed seller centered. There are most of the time a strong candle will form and sellers will still enter. Like this is a zone. This is a strong candle, Marubozu. Sellers will still enter. Most of the time, strong candle will form without reversing. Like this is a Marubozu, market will still continue moving higher without reversing. Okay, so it depends on the market situation at that time. Like if there's no strong momentum, if there's no strong momentum, and the last candle that form is strong, if the last candle that form inside the zone is strong, market might decide to retrace. But if there's a strong momentum, strong candles, strong candles, strong candles, and this is a level, the last candle that form is very strong, the market might decide to continue. Or if this is a resistance level, and the market is forming a strong momentum. The last candle that formed is very weak. Market might decide to reverse or might decide to continue. Okay, so it depends on the market situation at that time. Like this is a downtrend. The way the market is moving, lower highs, lower low, which means anytime the price retraces back to any support or resistance, any resistance zone, despite the momentum is strong, market will still reverse. But if the market is trending higher and reach a resistance zone with a strong momentum, reach a resistance zone, it might not reverse, it might still continue. So all depends on the market structure or the market situation. So you see that it's a strong candle, but sellers still entered. Let me show you one example where the sellers did not enter. Okay, so here, see that sellers did not enter. This is a zone, but sellers did not enter. It depends on the market situation because if you look at the trend, this is not a downtrend. This is a retracement. These are some counter trend. This is the uptrend that is occurring. So market is reversing from this support. So this is an uptrend. So price is going higher. So in that case, it's not respecting zone if a strong candle form. This is just a retracement. Retracement, retracement, retracement. Those are counter trend. But if the market is trending down like this and a strong bullish candle close inside this zone with a momentum, market will still reverse. But if the market is moving higher like this and this is a resistance zone, if the strong bullish candle close inside the zone, buyers will still continue. So all depends on the market structure.
Okay, sir.
Yeah.
That's good. Please, you I didn't join the class on time, so you have to upload the
Yes,
video
I
so
will.
that I can download that.
Yes, I will share it. I'll share it with the group.
All right, thank you.
Yeah. Okay, guys. See you next week. We're going to discuss on how my price will touch the level and reverse. Price touch the zone with rejection and reverse, or price touch the zone with rejection and still continue. That will be what we're going to discuss next week. So I'm going to give you some instances, what you need to observe, what you need to know. Okay. Good night, everyone. Have a nice day.